Welcome back to For the Culture Crypto, where we bring blockchain to the block. And remember, this is not financial advice. Today, we're diving into a headline that should wake everybody up. Over 60 billion has flowed into crypto this year, and Wall Street is leading the charge. Let's unpack what's really happening and what it means for everyday investors. What's going on, D? You ready to get to it?
Yeah, man, let's get to it. Episode 20, man, we still on it. Talking about
Yeah.
$60 billion and what that looks like when institutions are sitting back and it's hard to say this, but it's a silent 60 billion. You never thought you would hear that
You
phrase,
right
right?
about that?
It's a silent 60 billion. Not a lot of people are talking about it, but this is what's been happening, right? They're getting into it. At the time of recording, we're in November, so we're starting, this is around the time where Bitcoin traditionally has went up. We see the height of the bull market. Some people speculating it might be an extended bull market height to December, maybe early January, because of everything that's happening in with government shutdowns and things of that nature. So really uncharted territory, but we're still on cycle. So we're going to see what happens in the next 30 days or so. But yeah, that silent 60 billion, not a lot of people are talking about it or know about it, right?
Yes,
So let's get to
sir.
it, man. Let's answer some of these questions.
All right, man. So, where is this 60 billion number coming from? What's actually behind it?
Yeah, so the 60 billion number, where is it coming from? So we're talking about JP Morgan reported July of 2025, about 60 billion net inflows into crypto year to date, right? So we're talking about outpaced inflows into private equity and hedge funds. So these things are kind of driven by your ETF. So as we know, the U.S. government has been a lot more lenient with crypto, specifically Bitcoin, Ethereum ETFs, and some altcoins are getting into there as well. Ethereum is considered an altcoin. Everything other than Bitcoin is. So we're talking about institutional funds. And so, as well as new market products, as we talked about a little bit in a previous episode. So, this is where this number, this 60 billion, is coming from. These different hedge funds and these different financial vehicles for retirement or a way to save some of your money and resources.
Why is Wall Street suddenly so deep into crypto after years of hesitation?
Yeah, so why is Wall Street all in? So, like with regular people, everyday people, right? Change is difficult. And so when you are so used to making a lot of money, like just gross gains off of the dumb money, you guys being the smart money, whenever there's change, you're going to resist it just naturally. And then you're going to try to find a way to adapt and to take advantage of it. So they're all of a sudden in because they think they have a play. Once again, that silent 60 billion, right? So it's a shift from fear, FOMO, fear of missing out, regulation clarity, and the ETF approvals. That's what really helps all this in Wall Street come in right now. And we're looking at big money. So big money sees crypto as a hedge versus inflation and dollar decline. And so we've always said that we, the people who are talking about crypto, been on crypto for a long time, we've always said it's a hedge against inflation. So now we're seeing that start to play out. And once again, they missed the early cycles, but they're not missing this cycle. So that's why they're all in now. They see regulation being more favorable. They think they have a play in, or they know that they have a play in, and now they're going to go ahead and get and take part in this cycle here that's coming up to make these huge gains.
Interesting. All right. So, what types of firms are putting this money into crypto right now?
Yeah, so when we're talking about the type of firms, so we're looking at major players. We're talking about BlackRock, Fidelity, Morgan Stanley and Goldman, right? Also, hedge funds, pensions, family offices. Everyone now wants exposure. So now, when we talk about crypto or Bitcoin, everyone gets excited because they see the stories, everything being sensationalized as far as making millions and hundreds of millions of dollars on Bitcoin, and these different institutions getting in. Everyone wants a piece of it.
Are they investing in Bitcoin and Ethereum only, or are they spreading into other assets too?
Yeah, so majorly with Bitcoin and ETH. So we're talking about like 70%. But altcoins are gaining institutional attention. And once again, ETH is still considered an altcoin. But we're looking at Ethereum ETFs. They show faster inflows. Tokenized assets and stable coins are the next frontier as well. So about 70% of Bitcoin and ETH, but other altcoins are getting into the mix as well, especially with what is a category now talked about as US based cryptos. And so that's going to give a lot more exposure to those cryptos that are considered US cryptos or US based cryptos. So when Wall Street moves billions and billions of dollars, that's your cue to get educated, not emotional. So head over to fortheculturecrypto.com. That's the number four, theculturecrypto.com. And once again, grab your free Bitcoin basics guide and join the Discord. And so we're here to help and explain what these different shifts in the market look like.
All right, going to the next question. How do institutions play this game differently from retail investors?
Yeah. How do they play differently? So long-term accumulation, not day trading. So, we hear day traders all the time. We see that. We see YouTubers, these influencers. They talk about how they made X amount of money day trading, but institutions, they look at long term. So we're talking about they use OTC markets, custody solutions, and hedging tools. So they quietly accumulate while media talks volatility. They keep doing this. And that goes back to what we talked about before and earlier, that silent 60 billion. They just silently keep coming in and buying some, buy the dip, buy the dip, buy the dip, because they know long term, this is what their clients want and this is where the money is. And so they want to be where the new money is going so they can be ahead of it and take advantage of it.
Are they planning long term or just trying to catch this bull run?
Yeah, so as I stated before in the previous questions, institutions are thinking long term. They're thinking 5 to 10 year windows. They're not thinking 1 year, 1 month, 1 week windows like day traders. So they accumulate during the boring times, during the boring seasons, just like now, right? So they've already been accumulating. There was a huge drop, and guess what? They're still steadily going in and accumulating BTC and ETH.
How do these inflows affect prices and market confidence overall?
Yeah, so this is a good question. So big inflows equal higher liquidity and reduced volatility. So that's your quick cut to the answer. Big inflows equals higher liquidity and reduced volatility. So what we're talking about here is market psychology improves, retail follows the money. So now the retail investors, us, the dumb money, right? As they say it, we follow the money. And we definitely should. If the big whales, the market makers, are doing a specific action, they're doing it to make money, not to lose money. So Bitcoin near 68K recovery, October of 2025, right, of this year, shows that confidence. So we're talking about a big dip, and then it comes back and recovers. So there's confidence in BTC.
Okay, could this be the start of another massive bull run or a setup for a correction later?
Yeah, so it's likely a sustained uptrend, not hype driven. So we talk about